Welcome back to TechKidFX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which at the time of this recording has continued to hold above the 20-day MA here on the 4-hour chart. We are also trading within this ascending channel, which could possibly give us a breakout to the upper side. We have also continued to obey the Elliot structures, and yesterday we saw a break above a high that we have been watching at around the $1.3 mark, and we made a high at around the $1.3508 mark. And after making that high, we saw a long wick information over here, which was the first indication that the sellers were trying to take over the market. And after seeing that candlestick pattern information right here, you can see that we saw the formation of a bearish candlestick and also an engulfing candlestick, which after seeing the formation of these two, we have continued pushing even lower, giving us one more new low at around the $1.23 mark. And at the time of this recording, we are trying to push a little bit higher. And before I get further into the technical analysis and also give you my next price targets to the upper side in the formation of this wave 3, which I believe we are seeing here on the Polygon Matic chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart, where you can see that after making our low at around the $0.74 mark, we started a very nice bounce to the upside, obeying the Elliot structures, where you can see that the high that we made at around the $1.05 mark is what I'm terming as the high for that first wave to the upside. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, which gave us a low between the fib level 0.382 and the fib level 0.5. And after seeing the low for that second wave, whatever we expected next is a bounce to the upside in the formation of this wave 3, and I believe this is what is playing out, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gave me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $1.4205 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And for that to happen, we need to continue holding above the 20-day MA for us to have the support that we need for us to continue pushing even higher. We also need to break above the $1.3 mark, which is a significant high that we have here on the chart. And once you see those two moves play out here on the Polygon Matic chart, then there are chances of continuing to push even higher, fully maximize our target area to the upside in the formation of that wave 4 before we can expect a retracement in the formation of this wave 4, then continue pushing even higher in the formation of that wave 5 to the upside. And once we see the formation of this wave 5 of this Elliot wave structure right here in yellow, then I believe that will be completing an even larger Elliot wave count 3 to the upside, which is giving me the long-term scenarios that I'm expecting to play out over here. And if I zoom out, you can see that after making our low down here at around the $0.32 mark, we started a very nice bounce to the upside in a move that has been obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in yellow having the wave 5 making its peak at around the $1.3 mark, and that also completed an even larger Elliot wave count 1 to the upside. And after seeing the formation of that first wave, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where we also expected to see an ABC corrective structure play out, and I believe we are seeing such a structure right here, giving us a low at around the $0.74 mark. And after making the low for that second wave, whatever we expect next is a bounce to the upside in the formation of these larger Elliot wave count 3. And before I sketch out my minimum target areas to the upside in the formation of this wave 3, let me take a look at this chart pattern that we have over here, which is an ascending channel, which could possibly give us a breakout to the upper side. And that is as long as we are holding above the 20-day MA for us to continue having the support that we need for us to continue pushing even higher. And in case we see a breakout out of this chart pattern to the upper side, I'll be expecting to see a retest of the upper side of the channel. And once the retest is in, then we can continue pushing even higher, fully maximizing our target areas to the upside in the formation of that wave 3 before we can expect a retracement in the formation of this wave 4, then push even higher in the formation of that wave 5 to fully maximize the higher Elliot wave degree count 3, which is right here, and sketching out a minimum target area to the upside in the formation of that higher Elliot wave degree count 3, I can connect the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then drag the fibs to the low of the second wave, and that gives me a minimum target area at the fib level 1.618, which perfectly lies at around the $229.1 mark, and that gives me a minimum target area at the fib level 1.618, and that is at around the $2.291 mark, and that is the minimum that I'm expecting Polygon Matic to do on the long-term scenarios. But we also need to have in mind that we can also expect short-term bullish, bearish movements here on the Polygon Matic chart, and that move could give us a break below the 20-day MA, and in case such a move plays out, then I'll be expecting the lower side of this channel to hold. But in case we see a break to the lower side of the channel, then the worst case scenario for Polygon Matic will be playing out, because we can expect a retest before we continue pushing even lower to our next key area of support at around the $1.05 mark. So we also need to be prepared for such a scenario in case we lose the 20-day MA. But for me, I'm in favor of continuing to push even higher, provided that you're still holding above the 20-day MA, also manage to break above the significant high that we made at around the $1.3 mark, which is the high for that higher Elliot wave count 1 of the Elliot wave structure in blue. And once that happens, then that could trigger an even more impulsive move to the upside to fully maximize the formation of this wave 3. And also taking a look at the indicators here on the RSI, we are trading at around the 51 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. Also taking a look at the MACD, here on the MACD we have been able to print a bearish cross, but we are yet to see an increase in the selling momentum here on the MACD, and that would mean maybe soon we might be able to see that a reversal here on the MACD to fully support higher prices in the formation of that wave 3. And on the MACD, it's suggesting a short-term bearish movement here on the charts. So let's be prepared for both scenarios, and I'll be keeping you updated.